crude oil weekly inventory report came out today. You see the trades. This is our crude oil weekly inventory trading system that trades on Wednesdays. And we take the breakout from the 10:30 a.m. Eastern Time close by 30 points, long or short. And you see the long was at 46.39. That was a signal. The trade got in at 46.39 as well. And I did a manual entry on this. I waited for the I manually entered it in, and then I turned on automation to manually exit. But then I also got out before the Fed minutes, manually exited, and then got back in. So my profits are a little bit higher today than the normal system profits would be. And so it came close to getting stopped out because the trade was at 46.39. We have a $300 stop loss, 30 points, which is very tight stop loss for crude oil, and so the stop loss at 46.09. Came close, but it didn't. And so you can manually trade in situations like that where you wait for it to pull back near the stop loss and get in. That's something to consider as well in such a wobbly market. But right now we still have this stop loss in at 46.09. The crude oil just closed at 2:30 Eastern. It's 2:34 Eastern, and it surged into that close, but it didn't hit our profit target. So our profit target is 47.09. Our stop loss is still 46.09, or we'll exit at the session close, which is 5 o'clock Eastern Time. It does a set exit on close. You need to manually exit that 1 minute for the 5 o'clock p.m. Eastern Time if it's still in the trade. Hopefully it'll hit our profit target, but it could do anything. So that's the update on the crude oil weekly inventories trade that we sent out, and I wanted to share that with you as well. And I think the trend in crude oil is up overall. On these news reports last week, the inventories, the report, the market went down. I want to show you that trade. So last week we had two trades. Originally took the long trade, got stopped out, then it got short, and so it ended up plus 400 or 40 ticks on the day, and you see that sold off. Market sold off. There was a glut in the oil market based on inventories. The market sold off. Then the next day we rallied. This is Thursday, coming into Thursday. I anticipated this move. Took a little bit of a discretionary trade on it, and this thing rallied. This is a really strong accumulation pattern right here intraday, and took out the previous day's highs before that. That high on the inventories report, it took that high out, and then it's moving higher. I think the market will continue to move higher. The trend will be up through the end of the year, and we may see $60 or $70 in crude oil. And the reason I believe that is because when you get these reports, inventory reports say there's a glut in oil, there's more oil, but then the market comes back the next day and rallies. And then on Friday, you had the weekly rigs report, which comes out, and there's more rigs. There were more rigs added this week, or last week on Friday, and the market sold off, and then it rallied. And so anytime you see a market that sells off on news like that and then rallies, fundamental technicals are bullish, and so that's what we're seeing. Today there was a drop in crude oil inventories, and it rallied right away because it had already gone down before the news. And so look for 60 or 70 in crude oil potentially by the end of the year, as long as that pattern continues. Now if that pattern changes, then we could change our bias, but that's just something to shoot for, a target, a long-term vision. Sometimes it's good to have a long-term vision in the markets to understand the trend, not only technically but fundamentally. And here is the trade again. As you can see, I'm still waiting on that 47.09 profit target, $260 away. We'll see if it gets there, but I want to send this updated video out to you.